Alright guys, in this video we will talk about pips and ticks. Before you start trading on forex and futures, you should understand how price move and how to be able to calculate it. Pips and ticks are the smallest movement in these markets. You know, is think about it as one step. Every one step you do, that's how you start measuring, how the market start moving. So let's go here into a little deep in here. For futures, it's called ticks. It's the same as it is pips. This is used in future in stock market. It is the small possible movement that a price or a contract can make. For example, if you trade in gold, if gold goes for 3,950.1 to 3,950.2, that is equivalent to one tick. You know, and for example, on top says if you're trading a 50K account and you put only one contract, every time that these go one tick, you make $10. You know, so it's an example for you guys. And each tick has a money value depending on what you're trading. If you're trading gold, if you're trading Nasdaq, it depends what you're trading. Each contract has different price, so you should know what pairs you want to trade, and where's your budget, what is your capital, so you don't lose the entire account on pairs like gold, which are really volatile. So on forex, it's known as pips. It's pretty much the same as contracts. It's gonna be the smallest step the currency can make. So in this example, if you're trading euro, let's show AUSD, is that small movement that you can see in the graph going down. That's equivalent to one pip. So as I say, forex it's pips and futures are ticks, and both of them means how much the price has moved. We will go a little into this, into the risk management. How you'll be able to calculate it, and other tools that you can use. There's apps that you can download and pull your ideas of your trade and see how much you're gonna get, etc. But this is the idea, so you understand how to measure your trades and how to calculate how much you're willing to lose or how much you're willing to get on profits.